Alrighty, guys, welcome to tonight's session. Hopefully, everybody is doing well. Happy Monday. Hopefully, everybody enjoyed their little 3-day weekend. Today was a bank holiday, so I did not trade today. It was MLK Day. So, we're going to be going over what we're looking at going into the week. Any trades that you guys took last week that we want to discuss or go over, feel free as well. But first thing on the schedule, we're just going to kind of jump in, talk about where we are in the charts, what's my bias going into the week, and what we can expect to possibly see going into Tuesday as well. So, number one, first thing, just looking at the charts, again, noticing we still are in this daily breaker. I am no longer really, again, we still can continue to sell off from here. But I'm starting to lean a lot more bullish just because we've been having a lot of hesitation to go lower and continuing to rebalance price, respecting those bullish arrays. This day right here, which was on Thursday of last week, we retraced back down to that 4-hour fair value gap. And this is where I would have liked to see continuation and really kind of hold this candle to start, selling back out of this breaker. But we ended up bouncing right off of this and then starting to accumulate up here a little bit more. So this is kind of leading me to have a more bullish bias going into the week. Now, going into Tuesday specifically, I am going to be more bullish, but depending on what happens in the overnight session is really going to define my bias going into tomorrow. One thing I do want to keep in mind is there is a possibility we still do sell out of this, like me and Johnny were talking about last week as well. If we look at ES here, there is a possibility for us to maybe come up here and form a little SMT at this high before then selling from there. But ES is already super close to taking this little high here on the daily. So I'm expecting us to most likely just continue from there, right? On the daily, we failed to displace through the previous low on ES. We swept this, starting to have displacement back up. We're currently holding this daily order block. We still have this breakaway gap down here that we could start to expand back down towards if we want to on ES. But going into Monday, what I'm looking for, or going into Tuesday, is I'm pretty bullish. So zooming in here on the 1 hour, notice we're starting to accumulate here. We're starting to consolidate a little bit going in from Friday of last week. Overnight session just ended up opening up. I do not really expect us to come back down to this low, as this low was kind of the move to retrace back to OTE of the previous price leg. So I'm expecting this to most likely be our sweep going into tomorrow. So this is exactly what I'm expecting going into tomorrow. I want this to have the accumulation phase early on from the previous week before having manipulation at the lows, continuing to hold on to this imbalance before starting that buy side of the curve. Again, noticing all of this engineered buy side liquidity that we've been forming on our way to the downside here. Again, leaving all of these highs. We came up, respected consequent encroachment of the wick, came back down again, came up, respected again, consequent encroachment of the wick before continuing to sell off. Now we're working our way down to this internal sell side level. So I'm looking for this to get swept in the overnight session. Again, like what most of the time happens is London session is going to have this reversal. So a lot of the time when we do end up forming structure like this going into a day, a lot of the time, our buy side of the curve or our manipulation is going to start to move back up in London session. So once London starts to open, I'm expecting us to move back towards this internal buy side level. And this is kind of where I'm looking to see target internal. So going into the morning session, hopefully I'm expecting to see a setup pre-market. And a lot of the time, that's what will happen if we take out the sell side level in the overnight session, is we'll start to kind of consolidate here and then move our way back up. And then by the time pre-market starts to happen, is we'll start to have that buy curve up into this internal buy side before market then opening and continuing the move higher. So depending on what happens in the overnight session, I'm expecting to get some sort of buy model or buy trade targeting these internal levels here in the going into the morning of tomorrow. Depending on what happens in the overnight session, of course, is going to set us up. But what I'm looking for us to happen is come down, sweep this internal level, and then start to work our way back up, starting to run all of these imbalances. And then when market opens tomorrow, I'm expecting to see that continuation up again, taking out all of the generated buy side that we've been having here, right? So again, zooming out, really nice little power of 3 here. We're continuing to consolidate in this range. I'm wanting this to be the accumulation, right, before coming back down, having our manipulation in the overnight session, and then seeing our continuation during that New York session. It's looking really clean here. So my charting session overviews have been pretty spot on recently. We'll see if this one starts to play out as well, but this looks really clean. This would really be a high quality model if we can end up getting it. We have a lot of generated buy set up here. We're failing to go lower, especially after this move down here and how fast we came back up. I really do not expect us to go down here. In fact, I'm thinking about honestly setting a buy order at this low and putting my stop halfway between this low and this wick and setting my PTs up here, because I really am kind of confident that we end up coming down and seeing us sweep this and then immediately going back up. And I've seen it happen many, many times. So I'm honestly thinking about putting a little risk on and having a little swing trade, and I'll alert it after the session if I want to take it. I'm thinking about probably taking it going into tomorrow. But I'm going to set a limit and just buy these stops here because, again, market's starting to displace. I'm expecting us to work our way down to stop out these traders that have been long, and I'm looking for this to end up getting swept before working our way back up. And again, good risk on this would be here. Stop. Let me zoom in a little bit to see a better position where I'll put my stop. Most likely put it around here with this imbalance. And of course, again, my first PT here, what I would be looking at is to at this internal high, and then of course letting it go to that high here. But I really do not expect us to go lower than this. Now, again, you don't have to take this entry. This would be buy stops. Again, it's less confirmation than if you were to wait for the accumulation and then wait for the displacement and then take a long ride. That's of course a lot better setup, but I'm going to be sleeping at that time. And just from the confidence and the conviction of where we are in the charts right now, I think, again, the best possible situation of most likely what would happen here is to see us come down, sweep that internal level before then continuing back higher. So that's a possible trade idea that you can keep in mind. Looking at ES here, again, keep in mind, we have a lot of lows here. There is a big possibility that ES looks a lot more bearish than NQ does. Again, these lows are starting to look just a little bit too clean. We're starting to generate sell side here and on buy side. So again, we're in this little accumulation phase, which we could go either way here, right? We could displace, start to go lower, rebalancing to, again, that daily fair value gap because we have not yet reached back into here. Or we could come back down, again, sweep this, maybe form SMT. Again, keep in mind how close NQ is to taking this low versus ES. We're a little farther away, so we could form a little SMT here before working our way back up. NQ or ES has really nice relative equal highs up here aligned with this buy side level. To me, this just looks way too clean. We have equal highs up here as well. I'm expecting most likely this to get ran, but again, we could redistribute back down to here. So depending on what happens in the overnight session is really going to be giving my bias going into tomorrow, but I'm pretty bullish going into tomorrow, and I would really like to see this internal sweep before heading back higher. So any questions on that bias so far? What's the earliest you start looking to trade pre-market? Honestly, it all depends on what time I wake up. A lot of the times I'll wake up an hour before market open, and then I get to my desk at around 30 minutes, 45 minutes, 30 minutes before market open, and that's when I start to really, do my analysis for the day. And then really only the first 30 to 45 minutes of pre-market is what I'm actually trading, if there's a setup for it. So let me take a look at news real quick too. Tuesday, we have, let me actually filter this out real quick. So going into Tuesday, we have a manufacturing index comes out 8:30. That's pretty much it. Nice red folder news on Tuesday. Shouldn't do much. Wednesday, also got some nice red folder news. Retail sales, core sales as well. That should give us some nice volatility. Thursday, unemployment claims. And Friday, consumer sentiment. This week's looks really good. We got a lot of news, red folder news days, which is going to give us some more volatility, and the days that we really like to trade besides FOMC, CPI. But this is looking really nice. We should get some nice action this week is what I'm expecting. So took this trade on CL on Friday. First entry, I took the first fair value gap. That presented itself. That hit internal buy side, but I did not scale. I probably should have. For the second entry, we displaced nicely back into the range, so I waited for discount for value gap, and I took the same, and I took the next entry to target external, but it failed. Felt like an A+ setup both times, but what are your thoughts? Let's take a look here. So we ended up coming back. This entry doesn't look too bad. This one doesn't look too bad either. The one thing I would watch for this is normally when I see a trade like this where it looks good internally, right? You're getting displacement, you took the long here. A lot of the times you're not recognizing something on the bigger time frame. So I would like, again, it's hard for me to tell if this trade's good. And the reason I say that is because I can't tell if a trade's good only on the 1 minute time frame. I don't have the external bias. I don't know why buy side's resting here. I don't know what this bigger time frame imbalance looks like. I don't know what the bigger time frame draw is. So a lot of the time it's kind of hard for me to say why this fails. Even though the entry looks good, it might not look good on the bigger time frame and the bias not be aligning, right? So I would want to see what that bigger time frame looks like. Took this with low size today, was a bang quality, but wanted to see your opinion on the trade as we were close to being stopped out. Let's take a look. Higher time frame liquidity taken. SMT formed the lows, entered off the 15-second unicorn after displacing. Think we were equal highs on ES. I was targeting. Took all contracts off after ES swept those highs. SMT at the low. Nice displacement. Nice fair value gap. Well, yeah, it looks clean. Doesn't look too bad. Again, ES has nice equal highs here. Good risk on this as well. Looks good. I think, again, first target here was your first target ES taking these highs? If so, then that should be good too. And then, of course, leaving your runners to go take these highs as well. Yeah, looks good. All right. Let's read through this. So I'm playing devil's advocate for an argument I think is stupid, but it has me hooked on one point that I will mention. Here it is. Say being successful in trading takes being able to follow an edge/model consistently enough for the probabilities of that edge to play out long term. And the reason traders fail is because they lack the experience to deal with the emotion that makes them not follow their edge properly. Things like greed, impatience, stress, fear, things that all make us see our edge where it does not exist, and we only see that after the fact. If we didn't allow emotions to get in the way, we would have seen the chart with, impartially. And if we can do that consistently with good risk management, things we can do and we can make it in trading. The argument is, if emotions were the only reason traders failed, why don't we all focus on coding an algo instead? Because emotions aren't the only reason why traders failed. Because that was my response. Emotions are not the only reason why traders fail. It's one of the reasons why traders fail. Why don't we code our own algo instead? Because that would remove the emotional aspect. The video I linked in the trading chat says that the real reason why traders fail is they lack the feeling/intuition of price. They lack discretion, that being the ability to decide whether or not to take the edge or not. My confusion with this is it goes against the law of probabilities. Not taking your edge goes against the whole idea, and especially if you aren't taking it based on feeling/intuition that is unexplainable in rational terms. However, the thing that gets me is if it was not an unexplainable thing/intuition that makes a model profitable or not, then it would be irrational, meaning it would not be a codable. And if it was codable, then why doesn't everyone focus on... I scrolled. I lost my place. Hold on. However, the thing that gets me is if it was an unexplainable thing/intuition that makes a model profitable or not, then it would be irrational, meaning it would be codable. And if it was codable, then why doesn't everybody focus on coding it instead of going on this journey of hell to master emotions? Okay, I'll say this. Great question. Number one, emotion is not the only reason why traders fail, right? Psychology is a big part of trading, but that is not the only reason why traders fail, right? If I gave you $1 million and you went into the market versus somebody who knows what they're doing, let's say emotions aren't even on the table. If I code an algo and the algo doesn't work, there's no emotions. It's just not going to work, right? There's so many other implementations into why traders fail versus are successful. Number one, of course, you were talking about taking the edge when you see it, the feeling of intuition. Not only is that a thing, but you have to take into account other things as well, right? I can have an intuition to take a setup. It looks great, but the conditions for it might not be met, right? Let's say it's FOMC, or let's say it was right after a bank holiday, or news outside is in factoring this, right? Even if the setup looks good, it's still the recognition of conditions that affects the probability of it, right? So there's other things that an algorithm cannot do besides the intuition side of it, right? So yes, an algorithm can absolutely work if you are coding it correctly and you're doing it the right way. Just as exact same thing as a trader. If your trader is not focused on the things they need to be focused on and they're not recognizing their faults, then they're not going to be able to improve their trading. So emotions is not just the only thing that is going to affect a trader from being successful or not successful. It's also focusing on what works, what doesn't work, and implementing into that model, right? And figuring out ways in which they should be trading it, ways in which they shouldn't be trading it. And a lot of what we're doing with TradeMap is that we're creating a system for you guys to be able to go through, journal your models, and be able to go back and see what models and what conditions that model works best in just by, adding data from it. So hopefully that answered your question. Can you look at this trade and let me know what I did wrong? Let's take a look. Took a long here. Stop there. Targeting the internal. What am I looking at? Okay, NASDAQ, 15. It doesn't look too bad. The only thing, again, we're generating buy side here, right? So this move up, when we have this move up, we're coming back to, number one, this bigger time frame imbalance here. And a lot of the times, again, this isn't a bad trade, but this is, again, continuing to just generate buy side, because we haven't had that manipulation on a bigger time frame. Right now, this is just a consolidative phase. When you see this action, I don't think you should be trading this side of the curve because we're most likely just consolidating, right? Zoom out, and say, hey, where is the manipulation? When I look at this chart, there really is no manipulation. I would say this is considered manipulation, but after this move, this is a completed model, right? We have accumulation, we have manipulation, and we have distribution, and we failed to go higher after this move, right? We moved back down, we continue to hold this imbalance. When we start to move up, I'm expecting these lows to get rejected, and this doesn't look bad, right? I would want to see this move up back up here, but on the bigger time frame, we're starting to generate. So if you are going to take advantage of this move, this is your generated buy side you're targeting, right? All of these internal highs that are being drawn out on this move lower need to be taken somewhere in here. When we get above this area, it becomes a lot less probable and a lot less, the risk there is not in your favor. So I would say zoom out and wait for the bigger time frame manipulation, right? The setup, if we were going to look at the chart right now, right? If you're going to look at the chart here versus here, once we have this amount of structure, the model just becomes a lot more high probability because you can recognize what the exact manipulation move is, right? If we're going to the chart and it looks like this gives us such a better understanding of what the market wants to do if we were just going to look at, this kind of chart here, right? What do you think about this PM short on Friday? Did a good job of not being married to my bias. My morning long that worked out never actually took my target at the high of day. After I saw displacement down, I realized that there was an SMT at the highs from the previous day, and we were now holding a 4-hour bearish fair value gap. I think I had a good execution, and I'm glad I took most of my position off at the internal low. I'll send it to Justin and see if I need to add anything to take my notes. Let's take a look. SMT, nice little displacement. Took the short, targeting internal low, never reached. SMT, this looks, yeah. So what was the difference here? Was it this right here? Yeah, this looks good. I would say this looks good too. Yeah, this doesn't look too bad. I think okay, keep in mind, when we're at this point in the chart, when we're targeting, again, when you're trading internal models, you need to target internal liquidity. So this is a fine PT, but I think you need to be scaling at least something at this low because, again, when we're trading, you're trading a bigger time from accumulation, right? Like we're literally just in this range right here, and we haven't broken out at any side of this. So trading the SMT, this trade looks great, but I think scaling something here, right? Because you're trading the internal model. This is the internal model. You're trading the rejection of the bigger time frame imbalance. You're using the bigger time frame SMT as confluence for this. But when you're taking this sort of entry, this needs to be your first PT because you're trading the internal model. Pull back to the bigger time frame imbalance. You have the stop rate that's high. You have the SMT. You get displacement. Your entry is great, right? This is a perfect trade. But when we come down here and we take this internal sell side, there's a possibility we revert back higher, possibly even going way back higher before then continuing lower. So you need to take at least something off at this low because you're trading the model that is going to tell you that this is the draw, right? Trade the low-hanging fruit, trade what you're confident in, and let your runners do the work, right? When you end up taking this kind of trade and you're like, hey, you take 50% off here and then you let the rest go, it's just a lot less risk. You're a lot less risky and you're taking risk off at what you know the market is going to give you. And a lot of the times when you go into the market and you focus on trading what the market is going to give you instead of trying to catch big moves, right? A lot of the things like that trade that we took on Friday, the long that we took, right? Which was a really, really nice long down here, targeting, working our way back up. When we kind of failed to displace above this high, I took my contracts off, right? And I got stopped in profit. But if you're trading what you're focused on and what the market is going to give you, you're going to be a lot more consistent, right? With this model, we took this long down here, working our way up. If I was to take most off here, which is what I should have done because it's what I know the market is going to give me, right? I'm not as confident that we're going to continue up, even if I am confident, right? This looks like a really good model. I wanted to see us continue up, but the more that the market, and I'm actually going to talk about this too because I'm going to implement this into my trading going into the next month, which is going to be continuing to scale my my stop in profits. But when I fail to see what I would want to see in a buy model, which is, hey, we continued through this first high, we're not really displacing through it. We kind of went lower. And we're kind of holding this 5 minute, but once we start to, fail to really bounce off of this is when I'm going to start to, again, continue to trail my stop because the market's not showing me what I want to see for my position, right? So again, if you're focusing on trading what the market is going to give you, you're going to be a lot more consistent, right? Again, always focus on low-hanging fruit is what we like to call it. Low-hanging fruit is what you know the market is most likely going to give you from your entry, and that is always going to be consistent. And so now it's just aligning low-hanging fruit with good risk because a lot of the times you're going to take an entry, your stop might be a little bit wider, and by the time that the market gives you low-hanging fruit, that might just be a 1-to-1, 1-to-5 risk to reward. So you want to figure out the best way to position yourself to be able to take advantage of low-hanging fruit, but also have good risk at the same time, right? Honestly, it's the first I've heard that emotion slash psychology aren't the only reason a trader would fail. Can you just mention all the other reasons, please? There's a lot of reasons traders will fail. Focus on the money. It's too emotional. You don't know your edge. You don't have confidence in your edge. You have no idea what you're looking for in the market. You don't have enough experience. I could literally go on for at least an hour talking about reasons why traders fail, and I can go on for an hour talking about reasons why traders are successful. Attempted this on NQ as well on Friday. Entry was around 10:30 EST. I feel like it was an A+ setup as well. The only thing that I could think that was a market share wasn't strong enough. Maybe thoughts? This doesn't look too bad. Okay, so going on Friday, let's talk about this because I took the same trade earlier, right? What I want you guys to focus on is when we're looking for manipulation, right? Why is taking a long here versus here way more probable, right? Taking a long here, sorry, way more probable. Number one, when we come down and we're looking for the sell side level to be swept, right, we're coming back into the bigger time frame imbalance. We had that 15-minute fair value gap. We came down earlier in the morning, rebalanced price to the inefficiency before displacing up, right? I wanted to see us continue higher at this point, and we're coming back down to that 15-minute fair value gap. So my bias for this point in time is I want to see manipulation. I want to see clear manipulation. The problem with this entry is when we come up and take this low, when we're looking for manipulation, again, just going back to basics, right? Accumulation, manipulation, distribution. We want it to be clear that there is a manipulation, right? And a lot of the times, manipulation is not just going to be a little poke, right? It's going to be where smart money is going to accumulate their position, right? Because there needs to be enough time. A lot of the time when we see a stop rate, it is intraday. So manipulation versus stop raids are different, in my opinion. Manipulation is where smart money is getting into their position. Stop raids is where we're going to redistribute back to price before stopping out traders and then, again, running price, which is what the algorithm needs to run liquidity, right? So markets are always doing three things: hunting liquidity, rebalancing the inefficiencies, rebalancing the equilibrium. When we're looking for manipulation, I want to see a clear manipulation move. When looking at this chart, what I mean by clear manipulation is we get the displacement where we recognize this as manipulation. At this point in time, when looking back at this whole time when we're still in sell side of the curve, when we take this initial low here, this could be manipulation. But for this to be verified as manipulation, we need to see a lot more displacement back inside the range, and we need to see bearish arrays getting ran through. When we come back up and we fail to break this just becomes an internal sweep when we're just creating more generated buy side to then the rest of the day possibly get taken, right? So this is just more generated buy side then continue lower. But at this point here, this is a lot clearer manipulation. Why? Because beforehand, we have all these generated lows here, right? If I was going to take everything off my chart here, if I was just going to take everything off my chart and go back to, again, our original model of what we're looking for, and we have no context here, I'm looking for consolidation and a manipulation and then distribution, right? This becomes my consolidative phase. Why is this not manipulation? Because we barely pierced through this, right? This is the difference between a stop rate and manipulation. Here we get that displacement below all of these lows, right? All of these stacked lows that we're creating before then having the manipulation and then starting to run through it. Now, why does this also not work? Why is this not a move, but this does? Notice this imbalance. When we have manipulation, most of the time there will always be a fast move for manipulation and will create some sort of imbalance. When we took this long on Friday, I knew this gets ran through because it is clear manipulation, because we've seen it happen. Notice before this, there was no inefficiency that was created here, right? No bearish. We have this move lower, right? This I'm not really worried about because we haven't taken the external low. So this is not really anything. We have displacement up. This is sort of an order block. There's not really anything here. There's just choppiness, right? There's no displacement. There's no imbalances. There's nothing that we can base price off of just by looking at this when we zoom out, right? When we zoom out, this is nonsense. There's not really enough here to give us a bias. When we zoom out and we wait for this, this is the first time where we get manipulation, where we actually create some sort of imbalance, and then we get a really clear understanding of what price wants to do at this point. If we come back up to this and get ran through, we now understand price does not want to go lower. We are going to absolutely go to at least what, again, this becomes our low-hanging fruit. Once this imbalance gets ran through, we know we're at least going to this high, right? Because sell side's been swept, we've had accumulation. This was our last move down And when we have this last move down and we start to, again, hesitate to go lower, I expect us to immediately get bought back up and start that AMD, which is going to be accumulation back to the upside, right? So again, looking back at this chart, there's not enough here for me to recognize if manipulation has happened yet. But here, there absolutely is, because we've gotten that displacement and we've created that imbalance that, again, then gets ran through, which gives us a lot more bias and a lot more structural confirmation of what we're looking for. Does that make sense? So one thing I always, if you have a struggle recognizing, hey, if you're in the market and you're saying, oh my God, it looks like I should take a long here, I'm not sure yet, or, has manipulation happened? What am I looking for here? Always zoom out and wait for it to be very clear. A lot of the times when you zoom out, and you'll start to recognize, hey, this is not as clear as I want it to be, right? It still seems like we're accumulating. It still seems like this. And guess what? What gets to happen is, again, if you're not focused on making money, or if you are focused on making money, you're going to look at this chart and say, hey, I think this looks good, but I haven't seen exactly what I would want to see. It's not clear. If you notice and you go back in your journal and you look at the trades that you end up winning and the most successful you're at trading, the trades are clear, right? All of the trades that you take previously in the day, by the time that you actually get that A+ setup, you know that that was probably the only setup that you should have taken today, right? Because it's that clear. The best setups that you take are the ones that you don't hesitate with. You know exactly what you were looking for. And the more experience you have, the more that you see it happen, the easier it's going to be to recognize those things. And you're going to be able to pull the trigger quickly because you have the confidence and the conviction to see it, right? So a lot of the times for me as well, and again, I continue to learn from my experience, is there's some days where I'll go into the market, I'll take a trade that I think looks good at the time. And then by the end of the day, I know the trades that I should have taken versus not have taken because of how clear they look hindsight, right? Looking back, it's like, hey, this is not really enough for me to take a long here. And I must have been focused on something else besides trading what the market was showing me. So a lot of the times what I recommend you guys doing is go into a week and focusing just on being very conservative. Don't focus on trading heavy size, but go into the market expecting to not take a trade and wait for the setup to be so clear, right? Wait for it to be no hesitation. Like going into a day, sometimes you're like, I think we're going to sell off here. Maybe we can do this, but I don't know yet, right? There's not enough structure. It's not clear enough for me. I might think this looks like an entry, but I'm not sure yet. And guess what? Maybe that entry ends up working out. Maybe you look at that model and say, hey, this is where I should have entered, and it ended up working out. That's where you get to go back and say, hey, let me journal this. This is where I hesitated to enter, but I'm going to journal this, and this was a winning trade because guess what? I expected this to happen, and this ended up happening. So journal those things, and the more you see those, and the more that you test those ideas and say, hey, I thought this was going to happen, and it ended up happening. I thought this was going to happen, and it didn't end up happening. And the more that you start to journal those and reflect the ones that work, that don't work, you're going to start to solidify exactly what you are looking for and what actually works. And when you go into a market focusing on being picky, the setups that are A+ are most of the time the ones that pop out and you just do not hesitate with. Took the same trade. Looks good, Coop. Awesome explanation. Thank you. I got you, brother. Justin, do you have any suggestions for a person who is trying to become a content creator? I know you have a great experience, and if you would share some ideas, that would be awesome. Make what you want to make. One thing I always tell people that want to make content is just make what you want to make. Don't make it for anybody else besides yourself. Like, do what you want to make, and then just use, again, concepts that will help generate and push the algorithm, right? Which is going to be editing techniques, which is going to be, keeping retention, stuff like that. But make content that you want to make, teach it the way that you want to teach it. I've also noticed the same thing about manipulation, Justin, because the key thing about manipulation is that it is trying to trap people who are wanting to go short. With the fast move down, when the impulsive move down gets ran through, that's when you get high probability longs. Exactly. And think about what retail traders are looking for, right? When people want to go short, they're waiting for the market to want to go lower, right? So if I'm a retail trader and I'm not looking for it, I don't recognize models, here I'm like, market could go lower. I'm not sure. We're starting to hesitate to go lower. When market actually goes lower, like, all right, now's the time to get in because, market's starting to quicken up, right? We're just got a lot of move to the downside. I'm expecting a continuation, right? That is when retail gets stopped. That is when we come down, again, sweep these equal lows before having manipulation and then running back higher, right? It's waiting for smart money to get trapped or for retail to get trapped. Probably why Dodgy is so right. Manipulation, down sweeping, sell side, fall displacement, inverting bear for VIGA. How do you deal with a losing streak? Great question. Dealing with a losing streak. Number one, going out of a losing streak. Or if you are in a losing streak, your main confidence or your main focus, a lot of people get trapped. A lot of people will take a losing streak and get trapped in making that money back. When people get in the losing streak, they look at their P&L, they're like, fuck, I just ran this, I blew up my account, whatever. And their main focus is immediately, how can I make this back? How can I, because I can't handle to lose this and just sit here, right? I have to make this back. And that's how you continue to dig the hole deeper. When you're on a losing streak, the number one thing you need to do is, number one, lower your size and just completely focus on building conviction and confidence. Because when you're in a losing streak, your confidence starts to get diminished. You're like, wait, is this model even working? What am I not noticing here? This isn't working. Normally it does work, blah, blah, blah. The first focus you need to be is just gaining confidence back, because confidence is what is going to make you successful. If you don't have confidence, you don't have conviction, you're not going to be successful. So your main focus when you are in a losing streak needs to be to build that back up, because it's going to get hurt when you're in a losing streak. So you need to lower your size back down, build conviction. Again, when you're losing, it's harder for you to enter into trades because you're more skeptical. You've been losing a lot. You don't want to lose more. So go into a week completely lowering your size, again, not focusing on making that money back, but focusing on making the conviction and the confidence back. Once you have that, then you can start upping your size back and start making good trades, right? But your main focus needs to be building confidence. How often do you consider SMT with YM? Sometimes I see it and you use it, sometimes other. Great question. I still am trying to build confidence with figuring out when and when not to take accountability, because I have used YM. I do use YM, but a lot of the time I'm focused on ES and NQ, and I just haven't built the conviction enough to notice when to take opportunities based off of SMTs with YM and when not to. I think there's a lot of people who sit there and just watch price form. When I'm sitting there, I'm constantly asking myself, okay, I want to take a trade. What do I need to see? And if I don't see it, then I take that trade. That simple. It's when you're sitting and not thinking ahead and to what you want to see in price do in order to take a trade, and you end up taking a catfish trade setup because it looked good in the moment, but you were just staring at the chart soullessly. Exactly. A lot of the times, people are just sitting there waiting to push the button, right? And a lot of the times when you're just sitting in the market and you're sitting there for an hour, 2 hours, and you're just like, what am I doing? You are more probable to just take a trade because you just want to do something, right? And that's why patience and discipline is so important. That's why we always focus on that, is your focus needs to be on taking less trades, right? And the more that you are in this space, the more you're going to realize that the better traders are the traders who trade less, because they're more patient, they're more disciplined, and they're waiting for exactly what the market needs to show them to have confidence. Being a good trader is not about taking a lot of trades. It's not about taking fucking every setup that you see and, being like, oh, I took this many trades this week, blah, blah, blah. It's about taking what you are confident in and taking high quality setups, right? And sometimes you're not going to get those setups. That's just how the market is, right? You are not being paid off of your time. You are being paid from your decisions, right? Being a trader is not like a normal job. You are not sitting here being paid by the hour. You are paid by your decisions. And then once you start to realize that you are paid by your decisions and not your time, you have to start treating trading as a different form of a business, because you have to be able to sit here and be patient. There are times when you will get a good opportunity. There are times when you will not get a good opportunity. And you have to be able to sit there and just not take a trade based off what the market is showing you. Do you think there might be a struggle if you're trying to build conviction, but also trying to be picky? I find myself struggling with that. If you're in that, it'll get through it. Trust me. Being a picky trader is not a bad thing. What being picky means is you just don't have enough confidence with what you're looking for, and you don't know what you like and what you don't like. Being picky means you just haven't figured out what works and what doesn't work enough to be not picky, right? It becomes if you're picky with anything in life, it's just you haven't experienced what you like and what you don't like. That's why you're picky, right? Because you know what you like, what you don't like, but you haven't experienced outside of that perspective to figure out, what works and what doesn't work. So when you're picky, what my recommendation is continue to be picky, but try things and figure out what works and what doesn't work, right? Go into a day, say, hey, I think this trade looks good, but hey, I'm too picky. This might be a picky trade. And say, hey, let me paper trade this. And so I want you to open up a section in your journal, right? This is why journaling is so important. Open up a section in your journal and say, hey, these are the picky trades. Journal these trades like you would have taken them. Even if you don't take them, say, hey, this looks like I would take a long here. Or this looks like I would take a short here. I'm going to go journal this and say, hey, I would have taken a long here. I think I would have taken a long here. Did this work? Did this not work? And this was why I was picky here. Trade the trades that you were picky versus the ones that you were not picky with, right? Because sometimes you're going to go into the market and say, hey, this trade looks good. I'm not going to take it because you're a little bit too picky, whatever, right? And there's going to trades that you see and you're like, oh, I'm taking this no matter what. Like, this looks clean, right? See what trades work with picky. See what trades not work with picky, and start to dial in what you should be picky with and what you shouldn't be picky with. But it all comes down with just journaling and experiencing what works and what doesn't work. Make sense? Well, I know I'm not canceling my 7-day free trial. This is the type of clarity I've been needing. Much love, Romac. Glad to have you with us, brother. 5 and 1 minute charts, equilibrium, 15-minute fair value gap, 1 hour fair value gap before that, SMT inside, 1 minute fair value gap, and entry taken on another 1 minute fair value gap. External sell side already taken, good entry with tight risk management since I'm in heavy drawdown. This was last Friday during London session. Let's take a look. Nice manipulation. You got the external buy side. All of this generated highs, right? Noticing, pulling back, manipulation, right? Having this sell side here, coming back down, rebalancing to the bigger time frame. Notice, big displacement out of this, right? Big displacement. Move right back up. You wait for the pullback to the bigger time frame. You trade the internal model. This looks great, brother. Looks fantastic. Great trade. Wait for the displacement on the lower time frame. And an SMT has added confluence. Great displacement. This looks great. Beautiful trade. Regardless of everything else, you did mention that the idea of intuition / feeling of price that I talked about is something you believe is real. Could you talk more about this? Absolutely. Intuition is a part of trading. And the more that you have experience, the more intuition you have because you've seen things happen over and over and over again. That's why I'm saying this setup, I would trade, to be honest. I would put a buy order here with good risk, and I would give it a shot because of the intuition of how much I've seen this happen, right? When we have accumulation phase and we're going into an overnight session, we'll literally go manipulate in the overnight session before, again, London session opens, and we'll just start to work our way back up. I've seen it happen so many times, and that's just purely off intuition. There is no model that has formed right now that shows me we want to go higher. But the intuition is that I've seen this model happen, and I know this model is going to form before it even forms because of what I'm looking at, right? Now, let's say it doesn't work. Right? We're going to go into tomorrow and see if that happens. But my intuition is telling me, right, the model that wants to form is we've had accumulation. We've had this previous move before. This move here shows me we do not want to go back to this low. This low was simply rebalancing price, stopping out these lows here, stopping out this low here. Again, rebalancing to the bigger time frame fair value gap. Big displacement up. We're continuing to hold the 1 hour fair value gap. This is where stops are residing. We've had all of these recent lows here. Again, all of this generated sell side, right? Low here. Low here. Notice there was no stop rates here. There was no low that was taken before having displacement. Before here, having displacement lower. This shows me we want to go take out this low. Once this low gets taken, there's no reason for us to go lower. We've done everything we want in the model. We have accumulation. I'm looking for manipulation. This is going to be the stop rate. I'm expecting us to come down here, stop this out, maybe accumulate for a little bit before just running all the way back up and targeting this internal high. And that's just off of intuition because I've seen it happen many times. There's no model that's telling me that I should trade this right now, right? And the more, again, it all just comes down to the more you see it. Intuition is based off of experience, right? Anything in life, let's say I have a problem with, people taking advantage of me, right? Let's say I meet somebody and I'm really nice to them, and, I always do what they needed. They always do what they need to do, but they never do something for me, and let's say I meet somebody new and I start getting the same feeling from that. They ask a lot of me. That is intuition. I've had it happen to me many times before where my intuition is saying, hey, maybe be careful here. Intuition comes from experience, right? You've had the same thing happen over and over again where you have intuition of seeing the exact same thing happen in the future. That's what intuition is. Question for you, Justin. How do you feel with going into a day with high conviction? It's definitely a balancing act between confidence and arrogance. Great question. High conviction, there needs to be a balance between having conviction versus having an ego and overly taking advantage and breaking your rules. Conviction does not mean to over leverage. Conviction does not mean to fucking enter a higher position size just because you have conviction. Conviction is just adding confidence for your entry. It is just getting you in the market. That is what conviction is for. It's for you to have less hesitation and for you to jump in the market because you have the confidence in what the market is doing. It is not telling you that you should over leverage, right? Now, when I have high conviction, I will trade my full size, right? I will trade full size and I will risk what I want to risk because I am much more comfortable risking more on a trade that I have more confidence and more conviction in than it would be if I didn't, right? And that's just figuring out what works for you, right? What are you willing to risk on high conviction trades? What are you willing to risk on low conviction trades? And that's figuring out who you are as a trader and what you're comfortable with because everybody's different, right? My risk parameters and your risk parameters are going to be different. Do you feel you will use more confluences in your strategy / learn more concepts from ICT from here? Is it just upping your psychology? No, it's both. It's upping my psychology and learning more, right? As traders, we're always learning, right? Every single day that we come into the market, I'm gaining more and more and more experience, right? It's building more and more conviction or taking away from concepts that I thought I would want to focus on, and then it starts to, maybe diminish that idea, right? It's all back and forth saying, hey, I thought this was good, but I'm starting to see it not work out. I'm going to continue to watch this. Or, hey, this is what I've been working. It's continuing to work. It's going to keep building conviction for that, right? So I'll continue to learn from ICT. Of course, he's going to drop new videos and shit. I'll scan them over, and I'll focus on watching them in the market. But the thing with trading is people like watch a video and they go into the market and they start trading it immediately, right? The problem is you can't do that, right? Conviction and confidence is the number one thing you need, right? If I go into the market and say, hey, I think this looks good. I've never actually seen this happen before. I've never experienced this happening, but I think this is what's going to happen. You can't trade based off of that. You can't. I'm confident in my trading. I've tested my model and I know it works, but in the back of my head, that end goal is lingering, and I feel like it is a bit of an effect on my trading. Any thoughts on what I could do? The end goal. So you're focused on getting a payout, getting money, right? My recommendation for you is if you're at a point where you are confident in your trading, it's not a bad thing to set goals for yourself, but it is a bad thing to start to flood your brain with the wrong ideas of what you need to be focused on, right? And like we talked about this in a previous session before, but a lot of what I like to do as a trader, and again, that's why I took all of last year trading low size, right? And last year was just to build confidence. But last year was also to rewire my brain of what I want to get out of trading. Now, in reality, of course, I want to make as much money as possible. Do I tell myself that? No. And when I'm trading, do I think about that? No. But that is the goal. Of course, that's all the goals for all of us, is to make money. But that is not what you should be focused on. You should be focused on what is actually going to make you money, right? When I'm focused on getting jacked, I'm focused on going to the gym and having every single rep be exactly what I needed to have, right? I'm focused on, doing this form exactly how I need to, right? I'm focused on the process and not the outcome. When you're focused on the outcome, all you're doing is mental masturbation. That's literally all you're doing, is you're feeding the dopamine to yourself of actually accomplishing it without actually accomplishing it, and that starts to slow down your process. Does that make sense? Because a lot of people will have an idea, they'll have a goal, and they'll continue to tell themselves that goal, like, yo, let's get fun, let's do this. I'm going to get jacked this year. I'm going to fucking build a company this year. And you start telling your friends, guys, I'm getting funded. I'm making this. And all that starts to do is just feed your money or feed your brain dopamine of actually accomplishing that without actually accomplishing that. And you just start to slow down and you start to get less ambitious, and it's just not a good thing. Great explanation. You read my mind like a book. Speaking about journaling, OneNote works good. After watching your journaling video, I started using it and reviewing it daily after you recommended it. Used to write everything down, but changed my ways. Let's go, Savvy. Fair enough. Your intuition gives you this feeling that even though there isn't the model formed, you have a feeling that it will based off a ton of experience. But realistically, you wouldn't just place a long without a model forming. It's just the extra thing you add, but you wouldn't fully take the trade off that alone, right? Or would you? If I was to take it, okay, that's where rules come into play, right? Rules are to keep you from making mistakes and doing dumb shit, right? If I am to take this trade, let's say I was to do this. If I am to take this trade and just buy these stops, right? Because based off of intuition, right? And I think this is going to happen. I cannot use my full size. I cannot even use half size. I have to trade a quarter of my size if I'm going to take this trade, because it goes against my rules, right? If I'm looking to trade full size, I have to have my entry model. My entry model hasn't formed here, right? So if I'm going to take an entry here, I can trade a quarter of my size and then wait for my entry model, right? So I can take an early entry, put my stop down here, and then once I get my entry model, then I can take and add the rest of my size, which I'll enter full size here, and then I'll move my stop to the low once the market has shown me my entry model, right? My actual specifications for what I need to take a trade, right? Because that hasn't happened yet. So that's where rules come into play. Do you think finding bias can be done mechanically or with intuition/experience, or both? It needs to be both. I don't think you can have form a bias based off of intuition. You have to do it analytically, because the market, again, it all depends on what the chart is showing you. Would you accept dinner on me if I get consistently profitable with learning from you? Of course. I'll take free dinner. Would you say experience is the most important factor? For example, having thousands of hours live trading with decent knowledge of ICT concepts in your own model, it would be better to know every single ICT concept completely. But with barely any live experience in intuition because sometimes it feels as though, exactly, absolutely. Experience over education. Would you rather hire somebody that just had an MBA right out of college with no experience, or would you rather hire somebody who never went to college but has been working on their own business for 10 years or 5 years? 5 years in college versus working on their own business for 5 years. But this person went to college and studied an MBA, but they have no experience. Who do you think is going to be more successful? The person who's already been doing it, right? Just like if I was going to hire a pilot who's never flown a plane, but they've been in flight school their whole life, like for a couple of years, they know how a plane works, but they've never actually flown a plane. Who do I feel more comfortable with? Somebody who's been flying a plane for 5 years but has never been to school, or somebody who's just been in school but has never flown a fucking plane, right? Same thing with a scientist or a fucking doctor. Am I going to trust somebody who's going to give me a surgery from somebody who's been in med school but has never done a surgery versus somebody who's been doing a surgery but has never gone to med school, right? It's like, it's the same shit. Now that one's a little different because I don't want somebody doing surgery if they haven't gone to med school, but you understand what I'm saying. Experience is the absolute factor. Absolute, the biggest factor. Without actually doing it, you can't do it. Like you can't, like how can you expect, it just sounds dumb. How can you expect to do it when you haven't done it? Like literally simplify it to that. And especially do it at a high level. How can you expect to do it at a high level when you haven't done it? I see. In terms of a percent of the trades you take, how often you take that? Very little. Very little do I take trades off intuition. Like something like this, very little of the time will I take like just a trade like this without extra. I probably like 5% of the trades I take, maybe even less. But a lot of the times, the opportunity isn't there for me to say so. Like there's times where I'll be confident on my intuition, and there's times where I won't be. Right. And there's times where I'll actually take a trade based off it or just wait, right? Because this is a bias, right? This isn't a trade. This is just a bias. I expect us to come down here and then revert, right? That's a bias. I think that's going to happen just based off intuition. But actually taking a trade off that intuition, I have to have some sort of conviction in it. That example about the med school, I literally had a big ass argument with my girl with that one because she didn't think like freely outside the matrix at that time. Lol, I won. Check the 4-hour wick. No market consequent encouragement with this too. Again, exactly what I would want to see here. Come down, consequent encroachment of that wick, tap that, and then move back up. Yeah, I got you, takeoff. Very interesting question to counter that. What would you say to the trader who's been trading for 10 years and still isn't profitable? Would you say they needed more experience? If you're 10 years without profitable, you're complete. No, okay. You're okay. Listen, experience, it means nothing if you're not focused on the right things. Okay. That's like, okay. You're trying to find a reason of why something isn't working. There's always something. Okay. If you have experience, but you're not focused on the right things, it doesn't matter. I could say, hey, I'm a gymnast. You know, I've been in the gym for 10 years, but I've played on a fucking play structure my whole life. I'm still gonna call myself a gymnast though. Like it doesn't matter. You can call yourself a trader, but if you've been in the market for 10 years and you just open up the chart, look at some candlesticks, but you don't say you're not journaling, you're not watching videos, you're not focusing on gaining conviction, you're not focusing on building a model. It doesn't matter. Experience doesn't matter if you're not focused on the right things. Exactly. So it is focusing on the right things that matters more than experience. So figuring out what those right things, it's both. It's both, brother. You need to focus on the right things to gain experience. To gain good experience, you have to be focused on the right things. But there's also bad experience, which is good. You need bad experience to know what not to do. But unless you learn those bad experiences, if you're in the market for 10 years and you're not profitable, it is because you are not using your bad experiences to your advantage. You lose, but you're not using that experience to your advantage. There's a difference between having experience and using that experience to your advantage. That's why people get stuck. They're like, what am I doing wrong? I've been doing this for this long. It's because you're not using any of the experience to learn, right? Why do you think people get good at a business or growing a company or growing anything? It's because they learn, they fail. They get up, they learn from that failure, and they adjust, right? You fail, you get up, you adjust, and you keep going. Consequent encroachment is consequent encroachment is the midpoint. So if we take this 4-hour wick, a lot of the times when we have big wicks like this, consequent encroachment is going to be an area which gets respected, right? If we come up here, we have this nice little wick here. If I mark the midpoint of this wick, you can see we respected this before selling off. So this is going to be an area, a point where I think is going to be a high probable point in which we could bounce, right? Especially with this model of what we're looking for. We're already looking for us to bounce off of this sell side level. So this is giving me an extra area where I would want to see us bounce after sweeping the sell side, right? It's going to be consequent encroachment of the midpoint of the wick. Do you think support and resistance works as long as you have narrative? Support and resistance works if you have the experience for it. Again, you can be profitable with almost any strategy if you know almost any. Like, I know people that are successful trading retail concepts, but they trade retail concepts with the experience they've used. Because guess what? If you go into the market trading retail concepts, but you don't have experience, you're going to fail. You're going to fail, you're going to fail, you're going to fail until you start to realize, okay, what works, what doesn't work. And until that happens, you're not going to be successful. You have to fail. Like, you have to fail. That's just a part of trading. Without failure, you're not learning. Like, if you're not losing, you're not learning. You're not progressing. So one thing I want to say as well, if you're in the dumps right now, if you're losing, you cannot be successful without failing. Like, it's just a part of the game. How do you label your lines and fair value gaps? I just have templates for it. So in TradingView, you can create a template. So like, let's say I have this line here. If I right click it and go to templates, I have buy side, market structure, order block, sell side, SMT. And what I basically do is, create whatever you want, click template, save as, and then you could save them as templates and stuff. Kind of a long read, so all good if you skip over, but I added you in the general chat is attempt at explaining the specific reason experienced traders are better than unexperienced traders. Would it be interesting to hear your take? Yeah, I'll make sure to read that. When I'm about to take a paper trade, I sometimes hesitate because I think my bias is wrong and I start reanalyzing my bias. How do I make myself able to find my bias the first time without having to reanalyze my bias? Reanalyzing your bias is a good thing, right? Reanalyzing your bias is fine because, again, the market is constantly giving you data. Sometimes, a trade's going to look good, 5 minutes, and then 30 minutes goes by and you're like, wait, I'm on the wrong side here, because you have more data that is going to either, continue to give confluence for that bias or go against that bias, and it's going to start to change. So you need to be able to make decisions based off that. Now, if you're trading on a paper and if you have a bias, take that. Right when you see a trade and you have a bias, take it, because there's no risk, right? You just want to have the experience of pushing the button. You say, hey, this trade looks good. I'm going to take this with a paper account, because you need the feeling of doing that, not hesitating. You see the trade, you think it looks good, take it. You don't have any risk on the table, but you need to actually have the act of pressing the button and executing to build experience. And then again, journal it. Does it work? Does it not work? And then go back and see what you did wrong, what you did right? What might not have you seen in that moment. And that's the only way you're going to get better. Is it a problem holding me back from being profitable for me to hear you talk about stuff like CE of a wick and not understand what it means? Because I've been making great progress and I feel like every day I'm taking steps to being profitable, but don't watch many informational videos on trading anymore. And I mainly just hammer my psychology and my live trading experience, plus going over and what I did right and wrong. Basically took the long way to ask, is it all right to not constantly be learning concepts and just learning through live markets and great foundation? Absolutely. You don't need to watch a shit ton of videos. If you have something that works and you're confident with it, continue to nail that in. Don't let something get in the way of that, right? Because a lot of the times, again, more is not always a good thing, right? It'll start to, have conflicts with your existing bias. You're going to add more ideas, more concepts, and some things aren't going to align, and then it's just going to have you're just going to have analysis paralysis. So absolutely, just focus on what works and continue to build with it. I think the biggest turnaround in my trading is that I have to realize that success is based off my decisions I made, and most importantly, off the chart. Absolutely. I'm going off what you said. You can't be mad that I took it on paper and not on your live. Correct? Because I see a lot of people doing that. Wait, and going off what you said, you can't be mad that you took it on paper and not on your live. Absolutely. Again, it's the different ways of looking at it. Let's say I go into the market and I'm focusing on gaining conviction, and I decide to trade paper for the week, right? Because I'm focusing on building conviction. And then the trade ends up working in my favor, and I sit there and I'm mad at myself because, oh my God, I could have made this much money, blah, 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 blah. What happened to being focused on building conviction, right? you start to see shiny objects. You start to see things in your face waving around. That's like the fucking little devil on the side of your shoulder being like, oh, you want to make money. You want to make money. And then right after that, you're like, oh, that worked. Let me switch. Oh, I'm ready now, right? You took one paper win and then you switch over, right? And then you're like, oh, let me go to my live account because I could have made so much money right there. And then you end up losing and you're like, why the fuck did I do that? Because you're letting the little fucking devil on your shoulder get in the way of what you should be focused on, which is gaining conviction. So when you're going to the market and you are focused on gaining conviction and you paper trade and you take the setup and it works in your favor, you need to sit there and say, let's fucking go. That's exactly what I wanted to see. I went to the market, I executed, I did exactly what I should have, and this trade ended up working in my favor. I'm going to continue to do this, continue to build confidence, because guess what? I did exactly what I should do. I recognized it. I took action, and now I'm going to continue to build more confidence with it. That is a win. It is not money, but it is the action of actually doing what I needed to be doing that is giving you fucking results. Other than what I felt during the market is open, what else can I journal that will help me build good experience? Just back testing. You know, sometimes you go into the market, maybe you don't trade the PM session, go back later in the day, start to, maybe replay the action, right? Let's say, I didn't trade this day. If I don't trade, I'll normally go back and I'll replay the day on the 1 minute. And I'll just start to, skim it and be like, hey, this could have been an opportunity. Was this, maybe let me test along here. Would have worked? Would it not work? And then start to journal those things. How do you make the templates? I put my text above my line and I can't seem to make it group together, save on template. Right click it, template, save as. And then you can put your template name. Macros or quarterly theory, which is better? I mean, it's kind of pretty different. I mean, macros are just time in which they're pretty different. I mean, I don't normally trade quarterly theory, so I'll just say macros. But what do I need to see for NQ longs? I need to see sell side taken, and I need to see displacement back inside the range. But I think I'm going to take a one contract swing. I think I'm going to take a buy at this low for the overnight and then see how it goes. Just, again, one contract. I'm willing to risk it. And I'm just focusing on betting again on my intuition, right? And the more that I see the intuition actually work out, the more that intuition continues to have confidence. And the more that intuition I get to trust, right? Because you shouldn't trust intuition unless you have a reason to trust intuition. I'm a very logical thinker, right? I'm a very logical thinker. Without even if you have intuition, without actually having it happen before, the intuition shouldn't mean shit. All right. That is all I have for you guys tonight. Again, we'll see what happens in the overnight session. Enjoy the rest of your night. If you have any further questions, again, always feel free to at me in the Discord, and I'll help you guys out. But great session tonight. Hopefully you guys enjoyed your weekend. I'm excited to get ready for the week. Let's fucking kill it this week. We got Dodgy being a special guest on Wednesday that we're going to live trade with, so that'll be exciting. And let's have a great week, guys. So enjoy the rest of your night. Get some rest. I will see you all in the morning. Peace.